The breadth of the market is weak. There is some stock-specific trade, but the stock of the mornings got to be Zomato. Very strong set of earnings being posted, but more importantly, it's the brokerages that seem very excited and have reviewed their target price on Zomato. Karan Taurani, SVP of Elara Capital, who's been tracking this one for a while now, joins us on the phone. Karan, hi. Thanks a ton for joining in. Karan, the last time platform fees were increased by Zomato, we spoke, and you seem so constructive. And very clearly, your call has played out pretty well, right? The stock is trading firm, earnings are good, and a whole bunch of brokerages have now followed suit and increased their target price on Zomato. What have you made of the earnings, and what do you think is the main driver for Zomato from here on?
Hi, good morning. So I think if you look at the growth perspective, or if you look at the results this quarter, it's been a stellar set of numbers. We have seen strong growth on the food business of more than 25%. This is beyond management's guidance earlier, so there's a beat there. The food business EBITDA is seeing a consistent improvement. Q on Q, there's not much of an improvement, but yes, on a steady state, the EBITDA is all margins also growing. On the quick commerce side, there are surprises as well. If you look at quick commerce, they had already indicated that they will expand aggressively, plan to double down their outlets, and they've added more than 100 stores this quarter. And despite that, they have reached a break-even point. They've kind of come off as far as losses are concerned on a Q-on-Q basis. Now, this is like a very big respite because there's so much of noise of competitors, JioMart, Flipkart entering the space and discounting, and losses might increase because of higher discounting. But they've clearly proved it that quick commerce is not a game of discounting. Quick commerce is a game of convenience led. It's more in terms of the technology, user experience, and the product assortment, where Blinkit has an edge versus competitors, and they will continue to maintain that. So I think clearly all end, it's a very strong set of results. Plus the guidance is phenomenally strong. If you look at the food business guidance, they are guiding for about 25% kind of GOV growth rate going ahead. In terms of margin, they maintain their band of 4 to 5% adjusted EBITDA margin for the food business. Blinkit side, they are going to go more aggressive even post FY25. They plan to double the stores again on this FY25 base over the next 2 years after FY25. And plus, they mentioned that by FY25, FY26, FY27, Blinkit business also could turn profitable. So I think the key monitorable herein is, how the Blinkit business shapes up, because as far as the food business is concerned, it's around 40% of the total market cap as per our assessment, around 47%. That's growing at about a 25-30% kind of a compounding story on a steady state. How the delta is created on the Blinkit business, how do they reach that market share of 50% plus? How do they revive profitability on the Blinkit business? I think those are monitorables, and these will drive further upgrades going ahead.
Karan, there's also some who believe that with the launch of District, there could be significant alpha or delta being created for Zomato. Sure, but it's a new launch. It's going to take significant investment. And in terms of that investment playing out and turning revenue accretive, what are the sort of timelines you're putting?
So District is a new launch. We clearly, Zomato, a couple of quarters back, they had highlighted that they plan to take this business of, Zomato, the outgoing business, very seriously. In fact, the dining business in terms of GOV has touched about $500 million. And if you look at the plans going ahead, they plan to make this as the third largest business in terms of their P2C offerings. First one being food, the second Blinkit, and third, being this District business, once it scales up. So of course, the plan seems to be aggressive there as well. So from a current valuation standpoint, there's not much to make out of that because the size is very small. It's currently making a revenue of almost about 100 crores, in terms of a quarterly run rate, and 400 crores annualized basis. So there's not much to be made in terms of delta. But yes, given the kind of track record Zomato, has proved, in terms of the food business and the Blinkit business, the way these businesses have scaled up, we could see similar traction on the District business as well. And really, the app user experience has been phenomenal across both the food and the quick commerce side. So if they're able to offer that kind of user experience, if they're able to, kind of leverage upon the technological strength that they have, they might, you might see a winner coming on that front as well. Because that market, clearly it's only Book My Show who's been a leader so far, and Paytm has, kind of been much, below as compared to numbers and scale is concerned. So if that scales up, that obviously can be a promising business as well.
Right, Karan, on a consolidated basis then, they have indicated margins of around 4 to 5%, and of course, remaining profitable at the moment. Risks to these?
In terms of risk, if you look at the risk, I think firstly, if the food business, I don't see any major risk as such. The only risk is, ONDC, but the probability of that is very, very low because if you look at the traffic in terms of ONDC, in terms of volume orders, it's still operating at a very small scale. We have seen larger players like, Tata Neo, Ola Foods kind of go the discounting way, kind of offering delivery fee to push traffic and growth of food business on the ONDC platform. But, I don't think that's going to scale up in a very big manner. So I think that is probably one external risk over the long term, if at all that scales up, or if at all there is something constructive happening on that side. As far as competitive intensity, there's no competitive intensity apart from ONDC in the food business. Yes, a risk for the food business could be Swiggy. So Swiggy is coming up for an IPO, and towards the end of the year, if there are some changes in terms of their plans, or if they are able to kind of gain market share back versus Zomato, there could be some risk in terms of the food growth. But the probability of that also is very low. On the quick commerce side, I think there are multiple risks here. One risk is how this business scales up, because currently we are all talking of growth, but the growth is coming from the top 10 and the metro cities. And if at all the business does not scale up beyond the top 10 cities, there is a limited TAM opportunity. And growth rates could see a sharp convergence after 2 to 3 years. So I think that is the risk in terms of how this business scales up beyond the metro cities, and that's going to drive growth from a long-term perspective. A second risk is, of course, competitive intensity. I mean, Jio, Mart, Flipkart, all these players want to enter the quick commerce space because quick commerce is somewhere now disrupting the e-commerce business, and they are now kind of feeling left out, and want to enter this space very aggressively to compete with the incumbents like Blinkit. So something happening over there in the form of discounting could be a risk as well, but we believe the probability of that is very low because competitive intensity is something which really cannot impact someone like Blinkit. So let's say Blinkit grows by 120% or or 80% CAGR over the next 3 years, they could potentially be a market leader with more than 50% market share. And quick commerce as a business has got more margin levers as compared to the food business. It can actually emerge very big if this business is scaled beyond the top 10 in the metro cities. So lots to offer, good exciting times for the Blinkit business. And I think the risk for now will just be there. We don't see any of these risks, kind of catching up in a very big manner.
Right. Very lastly, Karan, what's your target price on Zomato? How much more upside from here?
So our target price for Zomato is 320. So after the up move of 10% today, we potentially will see a 25 to 30% kind of an upside from current levels further from here on. Oh, it's moved up 15%. So yeah, there's a 25% upside further from here on potentially. But as I say, this is a compounding story. Valuations will always appear expensive. FY26 basis, the valuations are fair. But if you roll it over to FY27, there is a good 30-35% kind of an upside. And every 6 months, 9 months, given the company's execution, if at all they're able to kind of even meet their guidance or surpass the guidance, you will keep seeing upgrades. You will keep seeing compounding happening in this stock. So I think it's a very attractive buy, a very attractive internet play, which one should consider from medium to long term perspective.